Hey everybody, Josh here. I want to do this quick video for you guys to give you some free coaching ideas and free training ideas for marketing. I know as a real estate investor doing short sales, there's really no better thing or no more effective thing you can do than spend time finding more people to talk to that want to sell their homes. That's really the highest revenue producing activity that's out there. So over the next week or so, I'm going to be releasing this video and then also a quick report specifically on center of influence marketing. So if you think about marketing, there's lots of different things you can do to market to find sellers, right? So some of the most effective things that we've taught in the past has been things like direct response marketing. Direct response marketing is things like direct mail, putting signs out, things like that. Number two, what I call manual marketing is things that you have to do that's manual labor. Things like door knocking, cold calling, picking up the phone, banging the phone, calling your list of pre-foreclosures. Number three, probably the most effective way is center of influence marketing. And the reason why it's the most effective is because it's an evergreen idea where if you create relationships with centers of influence, they'll continually give you leads over and over and over, and it doesn't cost you anything. It doesn't cost you any money up front. And the last way is internet marketing. And internet marketing is a great concept to be able to fill your funnel full of sellers and buyers and private money. And it's also another evergreen concept that can be done one time, and you can continue to just add to it, and that will have an effect on your marketing over and over and over again. It becomes an automated process. But today I want to focus on center of influence marketing. Really, when you think about it, centers of influence, there's really 4 or 5 centers of influence. And when I say centers of influence, what I'm talking about are people who are influential in their industry or in their niche. So in real estate, we're talking about obviously realtors, mortgage brokers, attorneys, title companies, other investors, and maybe even construction crews, and even friends and family. Those are all centers of influence, people who have influence over other people who will do things because they're referred or because they're recommended. So I want to focus today on center of influence marketing and specifically working with mortgage brokers. Over the past year or so, maybe 2 years, I've been teaching a lot about realtor referral marketing. I've even written a special course on referral marketing, but I want to focus today in this free video on mortgage brokers and why working with mortgage brokers is a great way to get new leads. Okay, so let's talk about this for a minute. Why would you market to mortgage brokers? Okay, the first thing with mortgage brokers, I feel, a reason why you want to market to mortgage brokers is because number one, they're already spending money to get leads. Okay, any good mortgage broker is spending money on direct mail. They're spending money on advertising, classified advertising, maybe even the yellow pages. So they're already spending money. Number two, they're losing a lot of leads right now. Because credit is so tight, they're having a tremendous amount of refinance leads that are not approved. Okay, they have a lot of leads that come into their business that they're looking to do for a refinance, and the refinance falls apart because the home is over leveraged. Number one, the house isn't worth what it used to be. Number two, a lot of homeowners have damaged credit. Even if they got a subprime mortgage 3, 4, 5 years ago, now they're time to refinance. The lender that they're going to refinance with has higher standards to get that new loan. So instead of having a 550 credit score, the lender now wants a 700 credit score. Okay, so the mortgage broker goes to pre-qualify this person, and that person doesn't qualify. Obviously, in a short sale or a pre-foreclosure situation, the homeowner is probably a month or 2 behind on their payments as well, which obviously is going to affect them to not be able to get a loan. Okay. Another thing is when they lose these leads, their return on investment of their marketing money goes way down. Okay. So their return on investment, if they're spending money on direct mail or they're spending money on advertising, classified advertising, their marketing dollars are being wasted because the number of leads they're closing are way less. Okay, so these are a couple different reasons. Also, anytime there's a dead refi lead, right now that mortgage broker is not getting paid at all for that dead lead. All they're doing is saying, listen, I can't help you. There's nothing I can do to help you out, okay? So for all these different reasons, you can go out to the mortgage broker community and find mortgage brokers who want to outsource or give away their dead refinance leads to someone who can potentially help these people. And oftentimes they're trying to refinance because they're in pre-foreclosure or they're looking to get out of a foreclosure situation. So those are obviously the leads that we want, and cultivating relationships with mortgage brokers who are active, who do a lot of marketing. They can refer us, probably a dozen, 2 dozen leads a month from this mortgage broker community, okay? So this is the concept, is going after mortgage brokers to give us leads. What I want to talk about through the rest of this video is how to go after mortgage brokers, where to find these leads, how to pay mortgage brokers, how to continually follow up with mortgage brokers to give you more leads, and to make sure it's a win-win situation for not only you, but for the mortgage broker and also for the seller. So Rick just pointed out that I guess I'm a good trainer, a real estate trainer, but I don't know how to spell. I guess losing. 1-0. All right, so we're back in the saddle. One of the things I also wanted to point out is if somebody is in pre-foreclosure and they want to refinance, there's pretty much a rule of thumb in the mortgage broker community, which is this concept of 65 and alive. And what that basically means is that if a homeowner has 35% equity in their property or 65% loan to value, and pretty much any mortgage broker can give them a new loan, even if their credit is significantly damaged, even if they really don't have any money in the bank. Because if a bank can write a new loan where they're only at 65% loan to value on that property, then the bank is in a really good situation where even if the home does go into foreclosure, the bank is probably going to get all their money back once it goes to foreclosure auction or to REO. So an example would be if you have a $200,000 property that the homeowner would only owe $130,000, okay, so 65% loan to value. In that scenario, pretty much any mortgage broker, any banker can refinance these people, all right? So the concept is pretty much, listen, we want to go network, we want to go meet with, we want to go market to mortgage brokers, because if a seller is in pre-foreclosure, before they sell the property, before they engage a realtor, or before they talk to us as investors about buying or selling their house, the mortgage broker is the homeowner is almost always going to go meet with a mortgage broker to see if they can refinance to keep the house, okay? There's also a lot of people right now offering loan modifications, and a lot of mortgage brokers are getting into the loan mod business, okay? So if you can find a mortgage broker, a loan officer who's also doing loan mods, you're going to have people going to them to try to get lower payments on their home so they can keep it. So anytime a refinance or a loan mod is not successful, that person becomes a home seller. They have to sell their property because there's nothing else they can really do to keep it. They've tried refinance, they've tried loan mod, now they need to sell. So all you need to do is be in a position where you have multiple mortgage brokers, multiple centers of influence bringing you leads on a regular basis, okay? So let's talk for a minute about how to market to these centers of influence.